Hello, everyone. Welcome back to the Trading Room and welcome on our YouTube channel, ForexSignals TV. This is NFP Live. My name's Shain Vernier, one of the trading coaches here at How to Trade in ForexSignals. Along with Nick Quinn and Connor Woods, we try to bring you the best coverage that we possibly can with market insights, educational points, and just trading tips in general. So if you're an active trader and you want to trade NFP, I think that you're in the right place. So let's get started. Today's release is going to be a big one. I think that on the heels of the Fed and what the Fed did on Wednesday with the quarter-point rate hike, everybody's wondering what the state of U.S. labor is. Are we going to see a downtick? Are we going to see an uptick? Is this economy robust? Are we in for more rate hikes? Is the economy going into that recessionary cycle that many say? I mean, if you watch CNBC or Bloomberg, it seems like every 5 minutes we see the dreaded R word. So I do want to roll out the red carpet for everybody. We got some familiar faces in the room here. Samson, good to see you. Jolie, good to see you. Everybody on YouTube around the world, if you want to weigh in and just tell us where you're from. We always love to see where exactly everybody's from. It's a global community here at How to Trade in ForexSignals. Everybody's welcome. Remember, the goal is to make money. We only have a few rules here. Making money is the right answer, number one, and ask questions, number two. If you're not sure about something, remember the coaches have been in this a long time. We've already gone through the thousands and thousands of dollars. Don't waste your money if you're not sure. Ask questions. We'll do our best to answer. So once again, let's get started now. It's time. I think we're T-minus about 15 minutes or so. We've got a poll going in the room right now. What is your best guess for NFP? Between 180,000 and 236 is leading the way. That's what I would call a sandwich number. So let's get on with the show. All right. Now, NFP, just a brief primer on what non-farm payrolls is. NFP, the U.S. non-farm payrolls, is the primary measure of the U.S. labor market. Now, what NFP does, non-farm payrolls, counts the number of workers in the United States. Now, farming, private household, unincorporated business owners, nonprofit, and active military sectors are excluded. So it's not necessarily all of the jobs in the U.S., but definitely the lion's share of them, about 80%. So exactly, when we're valuing NFP, if you've never looked at one of these numbers before, it's very important to understand the concept of relative analysis. Remember, we judge these figures on a relative basis. Now, what exactly does that mean? It means the number is going to come across the wire here in about 13 minutes. Now, we're going to be judging whether it's a good or a bad number based on our projections and our previous release. In this instance, we're looking at projections of about 180,000, and the previous release was 236. So what happens in the markets when the number drops? Well, the NFP impacts the Forex in two basic ways. Number one, if it comes in above expectations, let's say we come in above that expected value and the previous release, that's going to be bullish for the USD. That you're going to expect strength out of the USD against the Forex majors. So let's say you're trading your Euro USD or you're trading the Great Britain Pound USD. The USD is typically going to gain a little bit of ground against those currencies if, in fact, we come in above expectations. We'll cover why in just a second. Now, if it comes in below expectations, that's bearish for the USD. Expect weakness against the FX majors. So if you're trading that Euro USD, you're trading that cable, that Great Britain Pound USD, look for those international currencies, those foreign currencies, really to gain some ground. If not right away, perhaps as the day goes on, and definitely as we roll into Monday, Tuesday, and Wednesday sessions. So you're going to want to be aware of those relationships if you are active in the Forex during this economic release. Now, how does NFP impact equities and commodities? It's the opposite. Now, remember, if we're talking about a number that comes in above expectations, that's going to be bearish for equities and commodities. Why? Because the dollar is getting stronger. Theoretically, we can buy more commodities and more equities with our stronger dollar. Now, do these relationships hold 100% of the time? Absolutely not. Remember, we're talking about tendencies. Everything in the markets is nuanced. We're talking about tendencies. What gives us the best chance for success? So if we come in above expectations, look for a pullback in equities and commodities. Now, if we come in below expectations, if the NFP comes in weak, what we would call a real soft number, that's going to be bullish for equities and commodities. You're going to expect strength in those other assets because the dollar is, in fact, going to be positioned to lose a little bit of ground. Now, why do these relationships exist? Quite frankly, it's all about interest rates. It's all about interest rates. It's all about monetary policy. And right now, when you're looking at a federal interest rate decision that we had last Wednesday, when we're sitting at about 5.25%, this is an epic level. This is a big-time benchmark, and right now we're in an incredibly hawkish environment. So the question is, if we come in above expectations, are these rate hikes going to continue? or are they about done? And if we come in below expectations, are we going to start cutting rates, as many think that we're going to do later in the year? Now, if we look at the historical level of interest rates right now, it's important to understand that we're at 5% for the first time since 2007. That's a big deal. That's one of those deals you need to write down and understand that what happened in 2007 was a major, major financial crisis. And if, in fact, we're headed for maybe down the same road, perhaps 5%, 5.25% is going to be the top of these interest rates. At what point do we start to see NFP come down? Now, remember, if it's all about interest rates, we've got to talk about our projections moving forward. If, in fact, we see a big number today, what happens to our CME FedWatch Index? What happens to our expectations? Right now, we're pricing a 98% chance that rates are going to be held static at 5% at that June meeting. 98%. We're not expecting anything to happen in June. Now, if we go to December, the end of the year, you'll notice we're still pricing in rate cuts. There's almost 100% chance. Well, there is a 100% chance of at least one rate cut later this year. Now, that's absolutely key. And when we start talking about what exactly that means to us, it means that our stocks, our dollar, has our dollar peaked? It looks like our dollar may have peaked. So our expectations for today are very, very basic. I mean, I really don't see too much here that blows my hair back. You've got the previous release of 236 projected 180%. I'm watching the unemployment rate very closely. Previous level was 3.5%. The projected level here is 3.6%. Now, if we go through where we are at historically, the trend is down for 2023. That means that our numbers are headed down in a big, big way since that epic number back in January's number. Early February was when that released. We had a tri-stream going. If you go back and look at the videotape, I mean, all three of the coaches, Nick, Connor, and myself, our jaws dropped when that 472 came across the wire. We've been trending south ever since, and that's one of those things that I think could continue today. We'll talk about more of that in a minute. Remember, we're within the 5-year range, so even if we come in on expectations, as long as we don't come in extremely, extremely negative, maybe like at a 50,000, or if we don't come in very high, maybe like a 500,000, we're still going to be well within one standard deviation of zero, and that's goes right back to that pre-COVID levels. And then heading out to the 25-year look at this number, you'll notice the only big dips in the last probably 15 years, the financial crisis of 2008 and COVID-19. We're nowhere near those situations. Everybody's drawing parallels right now between the current situation and the financial crisis of 2008 to 2012. So what can we expect today? Well, big picture right now, is NFP due to come in hot or cold? Here's our weekly numbers. We had jolts early in the week, came in a little bit weaker than expected. That means there's less job openings. ADP came in as a blockbuster number. It was twice of what we expected, so that is huge. That suggests a major uptick today in NFP. And also your initial jobless claims came in a little bit higher than expected yesterday. That suggests maybe a softer NFP number. The proof's in the pudding, and we're going to see. So let's get right out to price action now. I know everybody wants to trade and wants to look at some levels. I got a few things here that we really need to go over. Good to see everybody else, Spain. Good to see you. Sean Mullen. Let's see. Danasoul, good question. Do NFP numbers affect oil? Well, everything affects oil. In my book, I mean, if you're a trader, you have to be watching crude oil at least a little bit. That's sort of my bread and butter. I absolutely love WTI crude, but so it's one of my go-to every single day. You're watching crude in the morning. All right, here's a good formation on the DXY, and this would be the one level. You asked me, Shane, what level are you watching today? What are your eyes on? It's this bilateral rectangle right here in the U.S. dollar index on the monthly time frame. Now, I understand you guys are intraday traders. You love that long, broad, those real tight time frames, and you want to get as many trades in as you can. And I understand that, but don't ever forget about your macro levels. This is a profound bilateral rectangle. Now, a bilateral rectangle suggests that we may get a price breakout to the top side or the downside. For me, right now, it's all about 101. It is all about the bottom side of this rectangle, going back to this double bottom that's set up right around 101 flat and 182. I think that's absolutely key. So if I'm looking at this number today, and if I see a very, very, what I would call a soft NFP number. Now, remember, we're already pricing in those interest rates to hold static in June. If I see a soft NFP, meaning well beneath 180, I'm going to be licking my chops for a bearish breakout here in the DXY. That means the dollar will be losing ground. Perhaps that rate cut narrative that the derivatives traders on the CME are really pricing it aggressively. Perhaps that's going to be coming our way sooner rather than later. I'm watching this level very closely. So most folks say, Shane, I mean, you're looking at monthly charts. I'm an intraday trader. It doesn't affect me. It 100% affects you. Right down there is what I would call our hot zone, our hot LZ, or our kill zone if we want to be a little more graphic. Right down in there, that's the bottom of our zone, right around that 101 flat. And you can see on this 30-minute chart, we have absolutely hammered that zone all week long. I expect another test of it. I'm not saying sell right now. You can't get in there and sell right now. We need confirmation. We need a directional move, and the number needs to drop. But if I'm looking at one level only, today I'm looking at 101 flat in the DXY. You can trade it on the CFD. Some futures traders may be trading it on the Intercontinental Exchange or ICE. For me, I've got the popcorn out, and I've got the soda and the popcorn, and I'm watching that closely. So definitely want to take a look at that. Let's see. Man, you guys are relentless. Connor Wood, Shane's breakfast affects oil. Yeah, you got to love crude oil. We're going to get there in a minute. The other thing I want to touch on, Bitcoin. Probably nobody expected me to talk about Bitcoin this morning. I think it's in play. I really do. Now, 30,000 has been absolutely huge in Bitcoin. And when we talk about big round numbers and what they mean as potential support or resistance, take a good look at what we have here. You've got the $30,000 level, which is just a key big round number. And if you go to your monthly chart and you want to draw some Fibonacci's, we can certainly do that on Bitcoin. A lot of folks have. But take a good look at where we're at, sort of in the scheme of things. We want to go back and really evaluate the range of 2022 right down to these recent spike lows. You'll see exactly where this range falls. We're right around 50%, right around the 50% retracement of that big time range, which is where? Right up here, 31,870. We've got 30,000 in play. I think this zone between 30,000 and 31,780 is huge. If I was an intraday scalper, and I am. It's like one of those meetings. Hi, my name's Shane. I'm an intraday scalper. Well, 30,000 is key. 30,000, we have to have our eyes on that. So remember, a big NFP number or a soft NFP number affects everything. The dollar, Bitcoin, crude oil, gold. And I can already hear the question, Shane, what about gold? Gold's fantastic. It's one of these that we've been looking at forever. We had an absolutely great trade from 2072.50 that came across the board the other day. Absolutely beautiful short. Is it time to break the monthly double top? Peter Paul, good to see you, Peter. Is it time to break the monthly double top? Now, if you're trading gold, right there, that level up there between 2070 and 2075, I can't stress how important that is topside resistance. Now, if we do break that zone, we are going to be looking, I would be looking at 2000, 22.5, somewhere in there. I think that you could get a big time runner. So that's your monthly dichotomy or anatomy of this market. Let's go right to a weekly. Your weekly, you can see we got very, very compressed around 2000, and then we broke that big flash break of early Thursday session, rejected that topside level. Now let's get in here and let's take a look at our short time frames. Go right down to a 4 hour and see where we're at. Okay, we've got that big run. There was our flash move, rejection of that 2072. And where are we at right now? 2034. So if I'm looking at gold right now, it is very difficult for me not to step up and want to buy dips. We are in an incredibly supercharged news environment. I mean, when we're talking about news right now, we have to realize that the banking failures are of paramount importance. If I was looking to get long gold, you can see we broke 38%. I'm looking at 2000 flat, 2015. Those are potentially decent buys here going into this NFP number. All right, the polling numbers are in. We've got our poll. Let's finish up our vote. Right here, it's published. 61% of the room believes that the number is going to fall between 180 and 236,000. 236,000 to 350,000, 11% of you. 100,000 to 180,000, 21% of you. And a bad miss greater than 350,000 or less than 100,000 is at 7%. I want to thank everybody for getting me in on that poll. So the way we usually do this is the first one that sees the number posts it in the room. I will give them respect. I'm going to be watching price action very closely. For me, we'll get back to our oil analysis. It's breaking bullish. We'll talk about that after the number, but we're breaking here any minute now. When I'm looking at the cable, here's some key numbers to look at as we come across the board here. We've got a 50-month moving average up there at 128.74. I would keep an eye on that. Remember, we could get a big time move anytime. 130.30. That's a huge resistance zone. Also, downside support in the cable. 124.59. For the Euro USD, this is an interesting one to me. 78% of 2022's range is right there at 110.85, and this is the one that we're going to be watching on this 1 minute chart as the number drops. We're getting close now. We got about a minute, somewhere under a minute. All right, so to the top side, we are looking very, very closely at that 110.85 level as being a potential sell here in this Euro USD. I'm not necessarily sure that we get there, but anything can happen. Remember, this is a big-time number. Be ready for huge volatility. You can see on the 1 minute, we've sort of been trading sideways for quite some time. Okay, there's the number. We've got a bearish reaction. What is the number? Somebody post it. Huge bearish action right here. So immediately, I'm looking for a long-term level. What do we have here? Boom. That is a major bearish correction. What's the print? What is the print? Right there, we've lost a handle on 110.85 for the Euro USD. That means we need to be in pullback mode. What's the print? 253? 253, thanks, Bastion. Connor Woods, 253. Bruce, 253. Wow, that's an epic number. That shatters expectations. That mirrors that ADP report. That's incredibly hawkish for the U.S. dollar. Remember what we just broke down. Remember, a huge number is going to be bearish for your risk assets and your commodities. Now, what does it do to the dollar? Well, theoretically, it's going to bring strength to the dollar. Why? Because the Fed can hike rates more. It means that economy is still in that expansionary mode. We're not yet in a recession. That's an epic print. That's one that we're going to have to write that down and be ready to trade that one for a few days ahead of CPI. But right here, you've got the big time move. Now we're down around 110 flat here. Let's take a look at the Great Britain pound. And this is a fantastic, we may get this opportunity right here from 124.59, which is an absolute fantastic level. Let's go to the 1 minute. Okay, there's your probe. Fell just shy. What's our low? Intraday lows, 125.57, not quite there. I'm looking at support levels here in the cable, and that would be a big one we hit earlier this week, 124.59. If, in fact, we get down there, it's about 100 pips off, but this has the potential to really drive the dollar. Let's have a look. What do we have here? 101.61. Remember that DAX, that DXY I led off with 101 was the big support zone. Now we see price kicking back up into the middle of that bilateral rectangle, and that's one of those things that if we're going to trade it, we need a breakout, and that is not what we were looking for out of NFP. Not what we were looking for at all. Right now, we're seeing a bit of bullish participation in U.S. stocks. You can see U.S. large caps are still in bullish territory. This U.S. 30, let's get right down to our 1 minute chart and see exactly what's happening price-wise. Absolute chop. This chart right here on the U.S. 30, 1 minute chart. I understand it's a 1 minute. This formation has been the absolute story of 2023. We have seen whipsaw action. We've knocked people out to the downside. We've knocked people out to the upside. These markets do not want to take a position. Now, for intraday traders, that can be very difficult to trade. Very difficult because if we're not in a trending market or we're not in a market that's breaking out, it's hard to get on the right side of price action. It really is. So inevitably, we'll get the question, Shane, should I buy or sell the US 30 right now? And just by looking at that reaction to an incredibly hawkish, an incredibly strong NFP number, the first thing I would say is, well, you probably should think about selling it, but look at the price action. What's going to move this market directionally? I understand it's a 1 minute chart and we can get lost in the weeds very easily, but it's compression. This entire year has been compression. And, I hate to draw the parallel between a 1 minute chart and a monthly chart, but take a look at it. I mean, the monthly chart, absolutely nothing's happened. Absolutely nothing has happened this calendar year. January, February, March, April, nothing. We have gone absolutely sideways. So right now, I'm looking at probably 34.5 as this year's high. I was expecting maybe to push that, looking for a dovish number today. I don't know that we're going to push that ahead of CPI. This looks to me like we may be pulling back a little bit. Still, though, in your long-term metrics, you're bullish. If you wanted to get in here and maybe make a trade, maybe make a pullback, I would be looking at a pullback buy. But you can see right here, you've got a big sell-off. Now you've got a bit of a modest print today, a modestly positive print. I just don't see really any way that you're going to be able to get into this market with the prevailing trend unless we see a deeper pullback. So for me, boy, I am firmly on the sidelines with my popcorn and soda, watching these U.S. equities markets. More chop. Uncertainty is the rule. 3.4% unemployment. Unbelievable, Connor. We were looking for 3.6 today. We were looking for 3.6. We get 3.4. What does this do to our interest rate expectations? Is a rate hike now on the table? Are those rate cuts off the table? It's getting to be crunch time. We're going to need to know. We're going to need to know. Dinosaur, what now for gold? Yeah, that's the big question. Right now, I'm just sitting pat at 2016 buys, 2015 buys. I think that's a fantastic Fibonacci retracement sequence. You've got a beautiful spike low right there to a spike high. Nice pullback. We are still very much in a bullish market until I start to see the banking sector become stronger and stronger. I think that gold is probably going to be right around 2,000. I don't see it losing a handle on 2,000 for very long, given the degree of uncertainty. Don't forget geopolitical situation, Russia, Ukraine, China, Taiwan. Those are situations that we can't account for. All bullish market drivers for gold, as is your banking crisis, your banking strife here in the United States. So I'm looking at pullback buys from 2016, 1999. In a perfect world, we get what we want, and that's what we want. 78% retracement right around 1999. Just wait for that gold to peak just below 2,000 and then go long. I mean, that's what I'm looking at. That, like I said, I don't get excited about much in the markets anymore. Been doing this for a decade, but I'll tell you what: if we get a crack at 2,000, that's a tough one to refuse. That is an absolute tough one to refuse. Let me see right now. Let's see. Alsh has a comment here in the live chat. I expect the number to be above 225,000. The reason behind my expectation, Fed won't let the DAXI drop in the financial crisis. I think there's huge manipulation. It's a decent point, Alsh. I think that eventually the Fed's going to want the dollar to drop. And what that's going to do is that you're going to get that big bullish run out of equities, and that's going to take the pressure off a lot of these policymakers. So I'm sort of on the other side of your argument, but I like the analysis, and I like the way you're thinking here. That's a good point too, Bastian. Back when we had that huge print, if everybody that was with us, the tri-stream, the huge print, the 472, where everybody sort of went, holy cow, what does this mean? We did have a revision to that number. It came in at 512, and they revised it down to 473. So we have to start wondering if maybe the books are cooked just a little bit. Maybe there is some nuance in these numbers. All right, guys, right here, U.S. oil. I'm looking at U.S. oil. This has been sort of, one of these markets that has probably put 10 years of age on me, definitely in the last month or so. We are in May. That is full spring and summer seasonality. I call it buying season for WTI crude, and I've pretty much looked like a rank amateur calling this uptrend as we've watched the market absolutely fall apart. We had a gap up right here to begin April. OPEC decided they were going to cut production. You got that big gap up, and we sort of traded sideways and formed a very extremely rare island reversal pattern, meaning you had a gap up, and then you really traded sideways within a given range for an extended period of time before you got that breakout and then came off and filled that gap in. So when we're looking at stuff like this, we say, okay, the island reversal does suggest bearish price action, and boy, did we get it. This week's been absolutely crazy. Massive sell-off right there, pretty much wiped out the yearly lows right there in March. Boom, took those out. But now we're on the rally. You've got that inverted hammer. You're looking to rally here. I could put a Fibonacci here and give you some levels to sell. I am not interested in selling U.S. oil this time of year. I'm looking to play it to the long. If a person wanted to buy 70, 50 right now and stop themselves out underneath 63, you could certainly do it. It's just a heck of a risk. So if you're going to take a trade like that, you have to dial the leverage way down unless you're a high net worth investor or a high net worth trader, and then go, all guns blazing, guns up, get in there and get some. But I think that this market, at the very least, returns to this gap, in my opinion, by the end of this month or perhaps early June, but I'm still sticking to the end of this month. I think we're going to be up here towards the 90s. That's a bold statement because we only got about 26 days left in May, but typically this is peak pricing right ahead of the Memorial Day holiday. Let me see, Spain. The whole world seems to be devaluing their money. Absolutely. We knew during that COVID lockdown, we knew that the financial implications were going to be immeasurable and unpredictable. And now we're starting to see everything sort of unwind. We're seeing everything unwind. And what that means is it a race to the bottom for the currency? Are we really trying to restore value in global currencies, fiat currencies? Or are we just trying to keep the wheels on the financial system? I believe they're just trying to keep wheels on the financial system. I think that the old days of finance where you can put money in the bank and maybe save for a rainy day, I think those are over. Inflation is running extremely hot. Realistically, we need to be thinking about more rate hikes, not rate cuts, yet the markets are pricing rate cuts. So something to think about there. In any case, if I'm looking at WTI crude, like I said, it's a buy for me. If we go to a 30-minute chart, We're going to be opening up active trade for that traditional NYMEX session here in about T-minus 20 minutes. You've got a bit of an uptrend here. It's just modest participation. For me, this week, I would be looking for a bullish break out of WTI, just a buyback of what we saw just as after that epic crash to 63.50. So that's what I'm looking at for WTI crude. Now, as far as one last major we'll cover, then we'll run our raffle and get on down the line. The powerful Connor Woods is up for the U.S. Open at about 7:20 my time. So I don't want to cut in on his price action. I'm sure he's got plenty of good ideas and trades on following what is a blockbuster NFP report. In any case, New Zealand dollar has been one of my favorites, and it's been one of my favorites really since the get-go this year, and not much has happened. Realistically, not much has happened. There's your open, and we came back. We had a fantastic buy entry right here at right around 61.50, and we're still in the money, but we're not getting the upwards trajectory that I'm looking for out of the Kiwi. I like the Kiwi. It's one of my picks to click for this year. I think that if I was going to go long one major against the U.S. dollar, I probably would pick the New Zealand dollar. Solid economic growth, good unemployment numbers, decent inflation numbers, and the RBNZ is committed to restoring pricing stability. I look at them as being a global hawk, meaning they are going to raise rates. I like this pair to the long side. I think that what you have happening here was an absolute fantastic run-up late last year, pullback right to around 61.50, which I think is a beautiful zone. I would be looking to buy that again if given the chance, but right now we're sort of in bullish territory. Is there any way that we could buy it right now? I could go to a weekly. I'd say no, not really. I mean, this weekly chart shows you just how valid that number is at 61.50. If I'm in the market and I'm looking to get long the Kiwi, perhaps I'm looking at 61.50. A perfect world, we get a major correction before we start heading up for the rest of the year. 58, 98, 59 would be great too. We just got to wait and see what happens. But I like the Kiwi, and just sort of wanted to throw that trade idea out there. I like the idea of being able to buy this one. And get in on some decent price action. Right here is a good look at the 4-hour Kiwi. 4 hours typically my bread and butter for trading Forex. I like bigger ranges, bigger bar by bar ranges. And if you get into those 30 minutes and 5 minutes and 10 minutes, it can be really difficult to trade, really choppy trading conditions. All right, so that's just a quick around the horn. A few of the things that I'm looking at here. Let's see. Well, let's run the raffle. What do you say? Let's do it. All right. Want to thank everybody for participating in the raffle. Actually, let's take a look at our Fed Watch just one more time real quick before we run it. I want to see what happened to our interest rate expectations. And there you have it. Now we're starting to price in. Did you see how fast that changed? And we had a 0% chance of 5.25. Now we're pricing a 10% chance of 5.25. That means we're pricing in another rate hike in June, immediately following that robust NFP number. That goes back to what we were talking about at the beginning of the stream. If you sort of missed it, I moved very quickly. Go back and watch it again and take a look at those fundamentals. That's key. Now, what happened to our end-of-year expectations? Just in the last 5 minutes. Now we're talking about, we're still pricing in rate cuts. We're talking about 4.25, so maybe we're looking at a 3/4 point rate cut by the end of the year. We don't see anything that tells us to cut rates. We've got robust employment. We've got runaway inflation. Hike. The Fed has to keep hiking. It's going to be fascinating to watch how the markets price this in about a half hour, 45 minutes when that Wall Street Open does occur. All right, everybody, if you haven't checked out our Trading Academy, please do so. A lot of work went into this. Nick Quinn, Connor Woods, and myself, we put the hours in. Connor can attest to that. A lot of scripting, a lot of writing, a lot of educational content here, and we've got all sorts of things, and we also have a ton of coming soon content that I think you're probably going to want to check out. If you like today's stream, there's a lot of stuff like that in there, hours and hours and hours of video, so just hop in and get after it. All right, let's see here. What were we looking at? Tools. I believe we go to tools. Close that down. Also, you're going to want to check out our market analysis thread, actionable trade ideas each and every day from the trading community and the coaches. You're going to want to see that. We've also got some brokerage, some recommended brokers that we would be looking at. That a good place to start if you're looking to get involved in the markets. We sort of direct people to folks that are regulated, and we also have a trading news thread, which is keeps you up to date on all things news, and also our streams, our past streams. Something like that. So there's our $3,000 giveaway. That's what I was looking for. You're going to want to check that out. There's the results of our poll. All right, guys, let's get after it here. I want to wish everybody the best of luck. I want to thank everybody for joining us today and also getting in on the raffle. So here we go. Let's click and launch it. And all right, let's pick winners. Do we have winners? All right, here comes the raffle. Survey says, oh, pressure's on. Pressure's on, guys. The raffle's building. Yes, indeed, we keep going. Good luck, all. This makes inflation next week very interesting. Absolutely right, Connor. Absolutely right. DXY trading. I'm a trained professional. Darn right you are. Congratulations to Ayeho. I think AJALEO, Ayeho. If that's your moniker, if that's your screen name, congratulations. You win. You win. The back office will be in touch. Fame of me. Fame of me coming in. I feel like this is a horse race with these names. Fame of me coming in second, but definitely you still won. Remember, all three winners in no particular order. And Dragon 131. Welcome, Dragon. I haven't seen you around in a while, but congratulations. You won the raffle. So that's basically it from here, guys. I think we had a fantastic session. We had a blockbuster number. And like I say, money never sleeps. And if you guys are involved here, then you just made some quick money. So, ayeho, fame of me, Dragon 131, well done. All right, everybody, I think that's about it for me. I've talked enough, but sort of twisted your ear. Definitely, we came in. I mean, that is an epic print. Look at our expectations. We really did mirror that ADP on Wednesday. You're going to read a lot about that in the financial media. And also, we're back to that rate hike talk. Are we going to hike rates? It's going to be a fascinating discussion. And remember, next Wednesday, US CPI. That's a big one. That is one that you're going to need to watch. Wednesday, US CPI. Make the date. Wednesday, US CPI. All right, everybody. Be sure to check out our partner broker here, Switch Markets. You're going to want to click on the link below if you're watching on YouTube. Fantastic place to come. We got low commissions, tight spreads, all that jazz. Everything you need to get up and running in the live market from a position of strength. Remember, your broker is your partner in the market, and if you're going to trade with any sort of acuity or competency, you need a good broker. Check out Switch Markets. Call them up, send them a text, figure out if they can answer some of your questions. Maybe they're right for you, maybe they're not. Pretty solid brokerage. So click the link below to learn more. That's a mouthful. All right, everybody. Fantastic stuff. Thanks for joining me on YouTube. Thanks for joining us in the room. Thanks for joining us on YouTube. Remember, that's a blockbuster number. Like I said, the powerful Connor Woods is coming up in about 35 minutes with that U.S. Open. He's going to break down price action. If you're live on YouTube and you haven't checked out the trading room, check it out. He's going to have some actionable trade ideas and be all over the happenings of this morning. All right, everybody. It's been fun. As I always say, trade the action well, and we'll talk soon. See ya.